We look at the S&P 500 and look, we've hit our target at the 1650, the medium level. The 678.6, the square root of 61 is the 661 sort of area here. But as you can imagine, poking back up into these highs area here, there's going to be resistance, and that market will fold back out across the the medium level through here. So we can expect some higher, but we really need to expect some vibration across this 1650 here. This move up through here, look, it can be counted both ways. It can be counted as an impulse wave to the upside, but it can also be counted as an A and a B and a C coming up through here as well. So as I mentioned before, we're still mindful of this wave 4 coming, moving across here further, because the days, weeks here, time here is rather short compared to the previous wave 2 correction. So this could certainly, B wave can come over to here and the C wave come over to here, and just in simple terms it will be a little bit more complex than that as a double zigzag, but you get the picture. So look, the main thing is that that we allow it some time to unfold across here, and then we'll see what happens. But I also think too that there's a little more of a push to come up through here. So I think there's a little wave 4 here, then a wave 5 here, and then we get this type of correction here where it will either fail or we'll just get an A, B, C here, and then we'll move up from there. So there's a fair way to before we get to this point. And it's going to be a bit sort of violent in here, I guess. So anyway, that's the picture as it is. So it's just really less is more, and patience, and perhaps look at some other markets or whatever. In looking at this up through here, as I mentioned, it can be counted as an ABC correction in terms of, well, first of all, as an impulse wave. So we've got the 1, the 2, the 3 wave, 5 waves up here for the 3rd, the 4th here, and then the 5th moving up through here. But I don't think this is finished here, as I just mentioned before. I think we're looking at the sort of 1, 2, top of the 3rd here, then the 4th, then the 5th here. That's what I was sort of looking at through here. But as I mentioned too, this can also be counted as like an A wave, a B wave, and a C wave up through here. It's certainly possible, so we just got to be a little bit mindful. Look, we've reached our target, we've done, what we're supposed to be doing, and now we just need to keep your fingers off the button for a bit, So just on a intraday level here on the hourly here, coming from the 1600 here, we're counting up for 1 and back for 2 here, and look for the top of the 3rd here, which may or may not even be in place yet. On the futures here, it doesn't look like it, but on the cash, it appears that way. So slightly different counts, but I like to work with the cash if I can, as much as possible there. So, but look, you got the message. We can get more highs here, but we're looking for something across here. Look, the other spanner in the works is the US earnings season opening. So Alcoa sort of opened, had positive figures. So that could be a bit of a limelight for others to follow. So we need to basically be mindful and safer in earning seasons to buy new highs rather than new lows. It's the other thing too that we're at this medium level here, 1650. The FTSE's at the 6,500, which is a medium level, and the Dow Jones is at the 15,300. I know it's probably a little bit insignificant, but in terms of larger numbers, but support on here, and it's got to play out properly as well in terms of. It can have its sort of arrival, it can have its reaction, it can have its first high above the level, then it's got to have its little ABC here. But after that, if it finds support back on here, then we can be looking at 15.5 from that point there. So that's something that we're looking at, but we must expect something across here. Old highs would be, can kind of help confirm that as well. But those other markets at those levels will be, stalling it there. The only thing that can really push it higher quickly, well, the earnings seasons is one of them. Of course, the other one is the Fed's meeting tonight. So probably later in the course of events, but that meeting tonight can obviously drive the market as well. The other sort of interesting thing here too would be the bond market. I'm just trying to find it here while I'm yakking. It's this one here. So essentially, just I mean, the yields are higher in line with stock, but the bonds here, you can see that this is like a nice third wave down through here, isn't it? And this is like we were watching this as a corrective move through here, and that all panned out quite nicely. But this is like down for one here, and then obviously the third wave, all the way down here. The fourth wave pulling back to 38.2%, and then this move down through here. So this is a 10-year bond. So if we're looking at that there, roughly, that's good enough, 38.2 there. So I can see that it wants to get higher here. So it'll be interesting to see if it fails here. So a move down through here should help keep those stocks up there. Right, the European thing here, what I just wanted to point out here, I know this is all a bit squashy on this chart here, but the FTSE's in a bit of a bearish situation because from its high up here, we've got wave 1 and wave 2, 5 waves down here for 3, 4 and 5. So what we've been looking for here is a retracement level back up to 6,500, which is just this dark grey line here, and the 61.8 retracements up here as well. So we need to be mindful of what we've got through here as well. But same thing again, same with the S&P 500 and this market here. We need to allow them to unfold here. Yes, they can move higher, but this is it here on the 15-minute chart here. If you're going to go long from here, well, of course, you would use group 1 here, the top group 1, the 30, and go long from that point there and move up to the 50, take profit, work the trade back on the other side as support and work up from that point there. So they are pointing further to the upside, but just need to be mindful of this. The Australian market, well, is pretty much on track as we've been working through it, and if this count is right, then we would be looking for the 5 waves up, which is the wave 1 here, the wave 2 here, the wave 3 up through here somewhere. It just needs to be a bit longer than this guy here, the wave 4 here, and then the wave 5 here, which can complete this ABC correction we got here, the A, the B, and the C here. Yes, it can go high, it can do all sorts of things, but our main situation here was to basically build in long trades through here. I've got to find my charts at the moment, but look, anyway, the main thing today is that the futures market, this price here is higher than the cash market, so we should see a positive opening from here. So look, any upside you can buy, really. Just be nice to have support on the 4.9 there. Wednesday can be a bit strange because it can open wherever it opens and then trade down. And then in the morning, and then trade up in the evening, in the afternoon session. So it's normally, I sort of see it as a V-shaped day, sort of trading down like this, and then having the high, if not the high for the week. Thursday can open higher and then trade down. That's what Thursday normally does, and takes the stops out. So just need to be mindful of that. If Thursday is down and it's on lower volume, then we know that we're going higher from that point there. So we'll need to look at the volume. So on the cash market here, we can see that it's pretty safe at this stage. We can see that the buyers are coming in through here. This bar that was down here the day before, it was down on lower volume, so we know that's there's no sellers there here. This one here has been up on higher volume. So all of these bars here are telling us that in relationship to the volume here, and even this long one down through here, was lower than this one, at least anyway. So look, everything is pointing to the upside, and you can kind of see too that there is a nice support here, and that's what we were looking for there at this minor level here. It was resistance, struggled a little bit, and finally won out through here. So the upside is there. The 4.9 shouldn't be too much of a problem, but it's the 5 that we're looking for there, of course. All right, commodities. I'm going to start with copper first because it's very central to the material sector and also to the Australian dollar as well, and so forth, so Canadian dollar, and anyway, all commodity dollars. Okay, so yesterday we had reasonable CPI figures coming out of China. It was, the previous ones were 2.1. They're estimating 2.5 and 2.7 came out. Today we've got trade figures coming out of China as well, so be mindful of that. But just this pattern here, I just want to talk about this for a little bit because it obviously influences other markets. So this move up through here, we know it's corrective. So we had it as ABC in brackets before, but I'm just taking it down a notch into the next degree smaller here, but still ABC correction, but for wave A here. This suits quite nicely to an A, B, and C correction through here for a B wave that would be complete now. So while the market is above the 105 here, because the between the resistance here, which would be 10, which would be the strongest number, between 300 and 10, the strongest thing is 5, of course. So it's above that. As long as it stays above that and it's got sort of support there, then we can look at it moving higher to 10. In fact, the pattern that it can have here is the A pattern, the A wave, the B wave, and the C wave coming back up here. Now, it can come back up level with it. It could come a little bit higher than it. I've just got this here as having some sort of equality with the wave A here because that's normally the case. Once that's completed, and if it does make a new high here, then we would see it move straight down from that point there. The other path that it can take is a triangle pattern, which is a 5-wave structure with each internal wave being 3 waves. So we've got 3 waves here, we've got 3 waves here. So we'd see 1, 2, 3, 4, and 5 here, and A, B, C, D, and E, and then move down from that point. So, we are basically seeing it, bumping along the 300 road here. So we just need to, it's got support there, and we just need to navigate through all of this. But any move up through here, if this was, it's going to probably move up there anyway, as long as it stays above the 305 or say 304 for any sort of kickback there. But basically it can move up from here, and if it does move up from here, then it's going to offer BHP and the wannabes of the world that support, and also for the Australian dollar as well, which we are mindful that it can find support on 92, and this would be a driving factor from here. So it's it's in an important sort of point at the moment, and this is just it on a 20-minute chart here. So we had the A wave up here, counting this down for 1 here, back for 2 here, all of this being the 3rd wave down to here, the 4th wave and the 5th wave down through to here for the A wave, the B wave here in a nice A, B, and C wave in the 1, 2, 3, 4, and 5 here, and then down for the 5 waves down for the C wave here. And then this is what would possibly looking to be the upside here. So I haven't pulled that apart, but I can see it's got the strong 3rd wave in the middle. So we'll be looking for some sort of ABC here. If that's the case, then we want to see that move up through here, and of course that will have its little corrective patterns across there. But that's kind of what we're looking for. If that's the case, then we can go long on some of those material sectors, and we're sort of there with Santos, and because I knew gas was leading the way up, but energy, well, of course, but and oil, but this could follow now. So that's the point. Okay, so the oil market. Okay, that's moved up nicely. Okay, so in a bit of a nutshell, it's probably a slightly different count on this than on the on the charts in the oil section, but we'd been counting this through here in some sort of detail, And yeah, so yesterday I think we were looking at this being a little 5-wave structure up through here. So we're sort of labeling this as a wave 4. This has created a reasonable wave 2 here. And it's also important too that the time something takes through here, unit for unit, Richard Wyckoff's work, which certainly one of the certainly Wyckoff's certainly got a deeper understanding than the markets than most. But the distance across here, he would take that and line it up here in terms of the accumulation equaling the distribution through here, unit for unit. But anyway, that's fine. So the way that I see it is that I see that we've got a corrective pattern, and then that we find support on top of the 3 here, and you'd normally put the stop under the 2 here. Yeah, so this has still got further to move up here. So this is still building here. It's either the 1 to here or the 1 to here, and then the 1, 2, and 3, 4. So we can still expect this to, do its thing here as such. And if support is found on here, then we'll be looking for that if it's expanding to the upside, which it could be, because we could be in a massive third wave building up through here. So we need to look at the internal wave structure, and we need to trade in that direction and use the levels as as points to get in and points to get out. Alrighty, the gold market. Right, so right, with the gold market, look, essentially in the bigger picture, it's come down. This is group 1 here, 1, 2, and 3 here, minor level degree. It's come down here, it's bounced off this, and it's quite normal for it to come back and bounce, to test the previous level where it left off. In Elliott terms, we're looking at it as a 4th wave. It could just come to the 72 area here. It could come to the 1300 here. We're looking for a 38.2 retracement level from the top of this little structure here as such. So just roughly in there, you can work that out later, down to the low here. So it does come in at the sort of 272 area here as such, but it can push higher. What the thing is that this sort of, this is, if it doesn't go above this high here, then you can pretty much build in a short position on this first sign of an impulse wave to the downside, because it would just bounce lower each time. So if that's going to be the high and this one doesn't make a new high and we get impulses here, yes, when it comes down here, it will bounce off this again as such here. And, there will be a series of them here, but you will know that each one is lower as such. And that's what you're looking for. If we do get a new high up here, well, then we just have to work with that and work with the wave structure as it comes down. But this is a 3rd wave here. This is a 4th wave. Once it's finished, it will be going lower. So it's just a matter of finding a way in there as such. So the little corrective pattern that we're looking at the moment, so we're looking at this as the A wave, the B wave, as you know, and we're looking up here for 5 waves further up there. There's a couple of ways to count this up through here. It can be counted as 5 waves already to here. It can also be counted as 1 and 2 and 3 to here. 4 to pull back to 1230, 1242, I think it is, there, and move up from that point. So look, just drilling in here on the 1 hour chart, the most important thing here is that this move here appears to be corrective because it's in 3 waves. That means that high is going to be taken out. Okay, so all you need to do is just find some support here. That's tested support. So what you'd be, maybe we've got another chart here. Just clean that up. So I was looking at a possible, this morning I was looking at if this structure comes down here in 5 waves, then we've got to deal with it in another way. But the market has moved up from this point here, so that's fine. And that 1242 here is the 38.2 retracement level as a wave 4 here. So I think that's interesting. So look, just finding support on here should take this new high, this high out through here. Alrighty, let's have a look at FX. Okay, the US dollar, it's approaching 85, so we can expect it to have some sort of correction. Now, it's not really pulling back very much, is it, in any of these corrective moves here? So still 5 is the second strongest number in the market, so we should expect some type of correction here after we get a high in through here, maybe nothing, a little high through here. If it doesn't move up above here, then we'll get this pattern here, this 3-wave pattern from this point through here, pulling back to the 84 area through here. But yeah, look, it's important that they understand that we should get something like this across here, which leaves the euro here, still in its nice downtrend and third wave moving down, and everything's pretty much sort of on track. There's a couple of things I just wanted to point out here is that the 61.8 from this point here to this point back to here comes in around the close to the 127 area there. Okay, so that's that low there. Of course, all these lows here are going to play out as they will through here. So yeah, but still on track to further downside. So yesterday we were looking at a retracement coming back up here as a wave 4 or wave 2, which would have been higher through here. The wave 4 here would have been the 38.2 retracement level from wave 2 here down to wave 3 here. So it comes in around here, around the sort of block of the supply here as well. So the supply, the proportion and ratio, plus the psychology of numbers as well. So it all came in pretty much sort of on track here, and now we're looking at this move down through here. But what this does do, this move down here can be finished, or there may be another little move down through here, because obviously the wave 1's in here, the wave 2's in there somewhere, and then the wave 3 here. So we could have 4 and 5 here, but this could just be the 4th and the 5th to come down here. We'll explore that in a minute, but what I want to point out in this degree of structure is that we do have the 1, the 2, the 3rd wave down, the 4th wave down, and the 5th wave down through to here. So we do have a 5-wave structure from this last high up through here. So we should expect a bounce, and if the bounce is going to come, well, then it's going to come from developing support on the 128 there. So that's what you would look for. That can be the low, or there could be another one that's debatable. But in this degree of structure, if we get support on the 128 there, then we're looking for another move back up. Now, in terms of looking for another move back up, if this is cascading water falling down through to here, then it is possible that we would only see a 61.8% retracement of this one through here. So we would just see, that's upside down of course, but not that matters, but we'll just see back to this 38 here, but so we'd see a move to that point and then down from there. So that's a real possibility as well, but we'll get there when we get there, because we still need to get support on top of 128 first. So I think let's just see what we've got. There's a couple of options. The other option is that it pulls back to the wave 4 of 1 lesser degree, which is basically this one here, because then we would have to label this one down through here, if that's in place there, as the 3rd wave through there as such, from wave 2 to wave 3 here, and the 38.2 retracement level would be back in here, same thing again here. So I think the main thing here is that you can't really go long until you've got tested support on the 128, and until that happens, we may see a move to the downside. So just exploring that to the downside, this is where we are here. I can see from this little point here, from that point we've got the 1, the 2, the 3 and the 4 and the 5 here. So we've got that 3rd wave structure here, but there could be 2 layers in here. I haven't pulled it apart just yet. So that can be the low, or we can see another low coming down into here. one of the weekly lows is the 12.27.44 area here, which is close to the 50. So, it really is possible to see a move down into the 50, the old low at 127.44, and then moving up from that point there. So if you're going to short that, because obviously you'd be in with the trend coming to the downside, so you'd need that 127.72 there as resistance. And I haven't mentioned this before. When you get all the twos and the sevens together, they can play quite a powerful point in the market. So you wouldn't want to be short. You don't want to go short while being above that. If you're going to short, you need to be under that and needs to be tested and so forth. The other number further down would be the 127.20, which is this little guy in here. This will also play quite a strong part here as well. So just bear that in mind. The Australian market, the 90, it's a big number. It's a medium level. We're going to see a bounce from here, be it from where it is here at the moment or another move down, staying within this trend line down through here. I figured that, if we've got support on the 92 here, then we can consider that we'd be looking at wave 4 at this stage, which can pull back to the wave 4 of one lesser degree. And when a market starts, having an ending diagonal triangle like this and start to bunch up, they can snap back pretty quick. So just be mindful of that. In here, on the intraday level here, this fits quite well here in terms of the 1, the 2, the 3, the 4, and the 5 to this low here, having the wave 3 in place. And we know that the move up here is going to be corrective. So looking at this as the A wave, the B wave, and the C wave just for the A wave. Then there will be the B wave, the C wave of A, and then 3-wave swing for the B wave, and then up for the C wave, up to wave 4. So there's a long way to go, and it's corrective. This is why the copper market was quite interesting, because if that does bounce up, then this will help drive this up as well. And any figures coming out of China, which have been positive with the CPIs, and we'll see the trade figures today. So it all helps. But for this to be triggered here, I believe the 92 as a retested support, so not just to trade above it, but to come back and eventually find support on it would do that. But while it is the resistance here, then we can expect another move down through here. That's the side of it. So the Elliott Wave is not really being that helpful at the moment in having a very clear structure. So it's best to trade the price and get in there a little bit closer. So this structure that we're looking at through up here, yesterday we were talking about this here being an impulse wave and obviously delivering another one. Well, this is also can be counted as an impulse wave as well, so it can deliver another one. So we've got a little 5-wave structure up through here. See that one there, the 1, the 2, the 3, the 4, and the 5. So we should realistically get some sort of A, B, and C here, shouldn't we, before we see further upside in here. And that 92.30 there, the 92 will become, is the balance line, and group 2 here would be the support and group 1 will be the resistance. Its job here is to hold the price to the closest largest number, as is this one through here as well. So don't go chasing. You can chase that up there, of course, but realize that they run out of steam and they'll be coming back on you. But support on top of 92.30 creates the next long. So if it just continues to the upside, which it can do, and the reason for that is because it had its correction before the level. So it's got that level of support and accumulation. It's worked out. It's gone through its corrective process of profit taking, stops being taken out, value buyers coming in, all those sorts of things. So it may not have such a large corrective move back through here. It could just do something like that. So support on top of this level here, the 30, the 3, the group 1 would be the trigger to the upside. Alrighty, well, that's it. So we just need to be a little bit careful of of the current rally in the markets, with the CBAs and so forth, because we're still considering them to be a rally. So when we're looking at say ANZ or something different, we are just sort of understand this is that the rally that we're seeing in stocks is in the material sector would be corrective, and the rally that we're looking at in bank, this is the ANZ here, would be corrective. So we'll be looking at this as a 5-wave structure down, and we're looking at this being a corrective structure back up. The norm is the 61.8% or thereabouts. So in this case, markets gravitate to their closest, largest number. So it'll be a retest of, once support is found on the 8 here, the 28, then it'll move to the next number. So we'll be looking at the 30 for that move there. So so anyway, it's just, it's probably a good idea to more so, get a small position, sure, but allow that position to come into a lot of profit, rather than sort of adding all the way up into this space here, because we don't know how far it's going to go. Thursday could be the top of it there. We need to see how the US markets treat their levels and the UK treat their levels. And also the Nikkei has got the same pattern as the ASX 200 in its current rally to the upside, so that will roll over to the downside as well. And the Shanghai is not looking, that strong as well either, in terms of let's have a look at the Shenzhen is more of what we've been looking at, because we know that just take this off here. We can see that, it's trading under this is its first leg down, this is its second leg, which at some point will be rejected from there as such. So we'll be looking for some sort of move up there to retest it as such. And then once that's done there, then we would see another 5 waves of this sort of structure here placed over here as well. So, we're not really in a bullish situation. If it's going to it can just fail and come down from that. But if it was going to be an A and a B and a C, then it would be moving in from that point. So there's a long way for it to go before, there's really strength coming out of China as such. So alrighty, well, that's it. So good morning and good luck. Enjoy the day ahead.